Bitcoin is surging toward a seismic shift. Tether just revealed a $7.7 billion Bitcoin address. Mastercard is building a digital asset rail. And Halving, only 24% in, and history says the real move comes after. Add to that collapsing U.S. inflation, rock-bottom fees on major chains, and a liquidity cycle signal flashing for just the fourth time in Bitcoin's life. What does it all mean? Stay tuned, because by the end of this video, you'll know exactly how these pieces fit together and how to position yourself for maximum upside in Q2 2025. We begin with a bombshell. Tether has gone fully transparent. The stablecoin giant revealed a Bitcoin address holding 92,646 Bitcoin, worth a staggering $7.7 billion. That address, secured by a 3 of 5 multi-sig, confirms what many suspected. Tether is not just minting USDT. It's accumulating Bitcoin at a scale rivaling sovereign entities. This kind of public transparency is rare in crypto, especially for a company as controversial as Tether. But make no mistake, this is a flex of power, signaling to markets that Tether is not only here to stay, but is also deeply aligned with Bitcoin's long-term vision. And in the bigger picture, it reinforces Bitcoin's status as the ultimate collateral, the digital gold every major player is racing to secure. Now, let's connect the dots. As of April 1st, we're officially 24% of the way through the current halving cycle. Historically, this is the inflection point. Every previous halving saw price consolidation early on, then exponential growth in the final 75% of the cycle. If you're feeling like the bull market hasn't kicked off yet, you're right. Statistically, the major upside happens post-halving, and we're almost there. Tether's $7.7 billion buy-in? That's not a coincidence. That's conviction. Zooming out to the macro landscape, a powerful new signal has emerged. According to TechDev, a key liquidity cycle indicator has flashed for only the 4th time since Bitcoin's inception. Each of the past 3 times led to historic bull markets. This isn't hopium. It's data. Bitcoin's price has always followed liquidity. And as this macro liquidity trough reverses, capital will flow back into risk assets. Combine this with the halving momentum and institutional accumulation, and you've got a perfect storm forming. And here's another tailwind. U.S. inflation just plummeted to 1.38%, according to Triflation. That's a huge divergence from traditional CPI metrics, and it signals something critical. The economy is cooling faster than expected. So, what does that mean for crypto? Lower inflation equals increased likelihood of interest rate cuts, more liquidity, cheaper capital, and renewed appetite for high-growth assets like Bitcoin and DeFi protocols. The Fed might not have a choice. The market could force their hand. But what good is a bull market if users are priced out? Thankfully, blockchain transaction fees are now under 1 cent on multiple chains, including Solana, Near, Polygon, Aptos, and Internet Computer. On March 29th, the average fee on Internet Computer was just $0.0001. We are officially entering the phase where cost is no longer a barrier to mass adoption. And that brings us to the solution most people miss. Understanding DeFi early and acting on it while costs are low, which is why I wrote my eBook, DeFi, Financial Freedom, the Ultimate Beginner's Guide. Inside, I break down exactly how to earn yields, access airdrops, and protect your capital using DeFi, all in a beginner-friendly format. You can grab your copy for just $4.99 and start building your crypto income strategy today. Check the link in the pinned comment to download your copy. Now let's talk Ethereum, surpassing $1,900 once again. Ethereum just printed a 3-day bullish divergence, according to analyst Seth. Despite recent price action dragging Ethereum under $2,000, RSI momentum is diverging from price, a classic sign of an incoming reversal. Add in the fact that Ethereum still dominates L2 infrastructure, and you've got a high probability setup for Q2. So, if you've been waiting to enter Ethereum or considering pairing Ethereum with DeFi yield strategies, this might be your window. Meanwhile, Tether isn't stopping with Bitcoin. They've just launched USDT Zero, a bridge stablecoin variant, across 6 major ecosystems: Base, World Chain, Sonium, Swell, Mode, and Lisk. This is part of the growing Superchain thesis, where cross-chain interoperability becomes seamless, efficient, and user-friendly. Stargate is leading the charge in making USDT usable across any EVM-compatible chain. No more fragmented liquidity, just one stablecoin everywhere. It's a powerful reminder that infrastructure upgrades often go unnoticed until they become the new standard. And then there's the geopolitical bombshell. Eric Trump says that many countries are mining and stockpiling Bitcoin. He remembered us there are only 1.2 million Bitcoin left to be mined, and that there's a race to the finish. Now, take this with a grain of salt, but understand the signal behind the noise. Bitcoin is no longer just a speculative asset. It's becoming strategic. National reserves, corporate treasuries, and institutional portfolios are all converging. And if nations are really racing to accumulate the last million Bitcoin, the game just changed. Forever. On the network front, BNB Chain has reclaimed the throne, leading EVM chains in active addresses and transactions. According to Nansen, it outpaced Base and Polygon despite BNB's recent fee drop of 36%. What does this tell us? BNB is still a behemoth in retail onboarding. But also, Base is holding strong even after a 32% drop in active users. And with Stargate now integrating USDT Zero on Base, that number could bounce back fast. Watch for Base and Polygon to reaccelerate, especially as Layer 2 narratives strengthen heading into mid-2025. Finally, one of the biggest legacy players is quietly making moves. Mastercard is developing a platform for consumers, merchants, and institutions to transact digital assets. This is the kind of infrastructure that brings crypto to Main Street. It's not just bullish, it's foundational. When TradFi builds bridges to crypto, adoption follows. And in a world of falling fees, interoperable stablecoins, institutional liquidity, and a fresh halving cycle, this could be the most important signal of all. So here's the big picture. Tether is stacking Bitcoin. Inflation is falling. The liquidity cycle has turned. Institutions and even governments are moving in. This isn't just another cycle. This is the setup of a lifetime. But the people who benefit most? They're not just watching the headlines. They're learning, acting, and stacking smart. So, if you're serious about growing your portfolio in 2025, start now. Grab the eBook, join the Crypto Yield Pro community, and don't sit on the sidelines. Drop a like, leave a comment on which news shocked you the most, and subscribe for daily videos. And if you missed my last video, it's linked somewhere in your screen. Let's make this cycle count.